Good morning, guys. Welcome to the most underrated show on YouTube. This conversation that we have been having is just epic. Epic. It's from Meet Kevin to Sally's Beauty to, my gosh, this is great. So let's get going. All right, guys, Let's see what the market's doing. I have not looked for a little while. It's basically flat. I mean, every morning we look and this thing is basically flat. So let's get at this thing this morning. So first thing, oh, by the way, man, there's so many people, so many new people in the Bid and Ask Nation. Yesterday, I texted Tim and I said, Tim, how many people do we have? And at about what time was it? 7:30. He texted me and he told me there was 511 people. I think we're up to 520 people in the Bid and Ask Nation. It's incredible. I would love to total up the amount of money that's made in a week in that group. It's just nuts between day trading, long-term trading, etc. So if you want to get in, jump in, and man, you guys, thank you, and I'm glad that you guys are learning. That's all I have to say about that. So. Yeah, thanks. I mean, it's incredible. I never in my wildest dreams thought it would get to this point this quickly. So actually, Nick, Cash, and myself, they're moderators of the chat. We have a conference call tonight at 8:30, and we're going to talk about how to better organize it. And we want to give you guys, we want to keep making it better, keep giving you better value. So we're going to figure out a way to better organize this thing, better streamline this thing, and yeah, it's going to be awesome. It's going to just keep getting better and better. So I'm thankful to have those guys in the group because they are the boots on the ground, and they know more than I do on a daily basis. So it's a sweet cult. It's definitely a cult, that's for sure. It's a cult of personality. There's no doubt about that. The personalities in there are really something. Okay. So this is a good article, and actually I was talking to one of our patrons this morning about he was looking at purchasing a home, and he's not anymore because the market's pretty hot, as we all know. But it looks like the market is maybe cooling down. I don't know. I mean, you get numbers here and there. There's, of course, we're going into summer, so maybe things are slowing down a little bit. Kids are coming out of school. People don't want to be jumping right out of the crazy school year that was maybe at home, not at home, and then going in and buying a home, especially the crazy market. So housing prices and low supply are finally taking some heat out of the market. Mortgage applications fell 4% last week from the previous week. So this is the second week in a row that we're seeing mortgage applications fall. And let's see, this is the second straight week that purchase demand was lower than a year earlier, even though mortgage rates are still incredibly low. Everybody wants to know what this shirt is. I'll interrupt this and show you my shirt. Can I get this a little bit higher? It's a Red Sox shirt. It's not that I'm a Red Sox fan. I used to be very involved in pro baseball, and I had a couple of friends that played in the Red Sox organization. So that's all this is. It's not a red candlestick. Pending home sales, which are counted by signed contracts, are therefore indicators of future closed sales drop out. Yeah, blah, 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 blah. By the way, so basically all what this comes down to is inventory is, I mean, there really is no inventory. Maybe people are getting priced out. I mean, there has to be a point where prices are going to become way too high for the market. I mean, I was telling a story. I think this was on the live stream. I was telling this story. There was a guy that I know, him and his wife, they had a house in a suburb of Cleveland, pretty popular suburb, and they listed this thing for somewhere around it was about 190,000, something like that. The house went on the market on a Sunday. They had 89 showings, 13 offers, and sold the house for like $65,000 over ask price in one day. So demand, there's a point where that $65,000 over ask is way too much for the house that you're buying. And at some point, the market's going to start dictating itself and saying, we're not going to pay for those prices. So that's that with housing. This is another incredible number. The average contract interest for 30-year fixed rate mortgage with confirming loan balances of, it's called $548,000 or less, decreased to 3.17%. That's so low as an average for mortgage rates, but hey, we'll see what happens. If there's inflation, your home values are going to go up. It's as simple as that. It's really as simple as that. I mean, I would love to see continuous inflation, but steady increasing inflation. That's the problem that we see everything in. actually everything kind of in today's world. It's all about like, can we hype this thing and make it go 10 times instead of just having normal cycles where you can go, why don't we just have gradual inflation? Why don't we just have gradual increase in debt? Why don't we gradually pay off our debts? Why don't we just do things gradual? No, everything has to be one extreme or the other. It's all black and white. So, it is what it is. Fun story here. Cruise lines are finally returning to the U.S. ports. Here's what's going to be different. So I'm really happy to see that this is happening again. Celebrity Cruises, who's owned by Royal Caribbean, said that they became the first cruise line to have one ship receive the green light from the CDC, and that's going to happen on June 26th, a 7-night cruise out of the Everglades in Florida. So it's going to require passengers over the age of 16 to be fully vaccinated, and then starting in August, it's going to extend to ages 12 and older to be vaccinated. So that was expected. Now, they are doing, they're going to go through two sets of, the CDC wants to see two things done. They can run a simulated voyage, like we read last week, that there are going to be simulated voyages done. And that number is incredible. There's 250,000 people that have volunteered to be on that simulated voyage. Yeah, I mean, if you can go on a cruise for free, basically, and just do what the CDC tells you to do, that's pretty sweet. So that's a pretty big number. Or the cruise lines can opt to have only vaccinated passengers aboard, which I would think would be a lot easier. But I don't know the behind the scenes. But I have to think that putting together a simulation and figuring out COVID the protocols, this and that, I would just think that it would be easier to say, hey, if you're vaccinated, come on board. There's enough people out there. It's, I think, almost 50% of the country, more. I don't know. Actually, I don't know the number. I shouldn't even say the number. I think it's a lot of people in the country that are vaccinated. So odds are probably in the cruise line's favor if they just go that route. And it's probably cheaper. But either way, people are going to go back on the ships. So in Europe and the Southeast Asia, they're already cruising. And I don't think that they are doing, I don't think they have fully vaccinated ships going out, but they are showing no major outbreaks tied to those cruises. So that's great. And vaccinated passengers will not be required to get COVID. So the point of this story, and this is that vaccinated people going on a cruise, it's going to seem like it was before the pandemic. You don't have to get vaccinated. You don't have to get tested before going on or coming off, which is great. So that means we're getting back to normal life. Vaccinated passengers will not be required to get COVID tests before or after, and travelers won't need to worry about putting their masks on during long meals, at the casino, or during spa treatments. So this is great. It's great that we're seeing people getting back onto ships, getting back into normal life. These cruises need to get money to survive, and etc. Simon, that's a good question. How are they going to prove they've been vaccinated? I mean, I guess they get the vaccination card. Of course, there's... I mean, it depends. Yeah, I don't know. I assume it's the vaccination card. I don't know. But that just is common sense to me that's what it is. Okay. CCL is about 50% of your portfolio. Robin, that's a little much. Be careful with that. All right. Here's a great story. This is coming down to, of course, we've been talking about this for a very long time on this channel. I'm a big fan of Biogen, the company, and June 7th is the deadline for the FDA to make the approval of their Alzheimer's drug, aducanumab. And there has not been a drug for Alzheimer's that has been approved by the FDA in over 20 years. So this is going to be some groundbreaking stuff if it is approved. Now, they were supposed to... I think March 7th was March 7th. March 7th was their previous PDUFA date, which is the day that the FDA says yes or no to them. And on prior to March 7th, they said, we need more data from you guys proving safety that patients will be okay. Now, of course, there's the argument that's going on that patients that have Alzheimer's are terminally ill, and it's not going... anybody that's dealt with Alzheimer's, it's a challenge. So the question came down in the discussion between the physicians on one side of the aisle and the other side of the aisle was that the drug is, at what point does safety of the drug, it wasn't killing people. They just wanted to make sure that it was effective and safe. But at what point was that balance made out? Was it safe? Was it better to try the drug on patients and risk whatever safety there was because they are terminally ill, and so that's the discrepancy that happened. Now Biogen went back, continued to do different studies, gave the FDA what information they wanted, and before June 7th is going to be their determination of whether they're going to approve the drug or not. So this drug, to me, has been moving. Let me just show you the chart of what this thing has been doing. This is not what I want. I want this. Let me just show you what has been happening with Biogen over the last, 18 months. Let's see what this thing does. Okay, so let's do all. All right, so this is all Biogen. So let me see here. So this massive gap right here, you can see that I'm drawing. This was all Biogen. This was Biogen. I mean, this was all aducanumab. This was aducanumab. This big drop, this was COVID. This big gap right here, this was aducanumab. This was aducanumab. So you can see that aducanumab makes massive swings for this. I've been reading Seeking Alpha. People say that you're either going to see $375 price or $175 price. Now, as an investor, I'm going to give you both sides of the story. As an investor, Biogen's a good company. They have a great pipeline. They do have some drugs that are coming to expiration of their patent, but they're still a great company. And they have the ability to go and acquire other companies because of how much money they have. So in my ideal world as an investor, because of this volatility, the drug doesn't work. The FDA denies it. Everything calms down, and I don't have to see these $100 swings of a drug company that I want to own. That's from the investor standpoint. From the actual standpoint that I want to see is this drug has the potential to be groundbreaking. Alzheimer's is terrible, and I hope the drug succeeds for the patients, and it actually works and is effective. But we're going to see what's going to happen over the next couple of days. I do think they're going to probably say something on Monday or maybe over the weekend to try to prevent a massive swing in drug price. But that is what this is all about. So before next Tuesday, they're going to make their decision. If you guys are in this, be careful with it. Okay, let's see. I pretty much just covered everything. The deadline for aducanumab is June 7th. The announcement could theoretically become any time before that, but I think it's going to come on that date. So virtually, they say that they're facing competitive threats. The FDA rejection could lead to a rise in shares of a company seen in acquisition as far as Sarepta and Sage, Ionis. Eli Lilly is another one, but I think Eli Lilly is too big to be. I don't think, okay, who said that? Zin, I don't think Biogen will be acquired. I think Biogen will do the acquiring because that would be a hell of an acquisition. I mean, Celgene was acquired for $74 billion by what do you call it? Bristol Myers. But I mean, that was a big acquisition. I wonder. Let's see here. Can I see? I want to see what Biogen's market cap is, real quick, and then. Yeah, so simple. So Cash just said I sold 200 shares of Biogen. I'm waiting for $175. So, they're actually not that big. They're not that big. Relatively speaking, $40 billion company. Celgene was bought for $75 billion. So, I have puts right now on them at 165 and 155 or something like that. So, all right, that's it for Biogen. So be careful with that, and we'll go from there. All right, 7-Eleven. This is a good story for me. Nicole, Paul, Seth, whoever has an electric vehicle out there. 7-Eleven has added 500 electric vehicle charging stations by the end of 2022. This is especially good for Paul because he just got the Porsche Taycan, which you can't really, I don't think you could charge it at a Tesla station. I could be totally wrong. But they plan on putting 500 stations around U.S. and Canada by the end of 2022. That's pretty damn quick looking at they currently have 22 charging stations in 14 stores. So that's awesome. I love 7-Eleven. What a great store. All right. Last one. PSA. I don't really have anything else to say about this unless you have a Tesla Model 3 or Model Y. 6,000 cars were recalled. Tesla is recalling nearly 6,000 vehicles because of brake caliper bolts could be loosened and potentially to lose tire pressure, whatever. Certain 2019 to 2021 Model 3 vehicles and 2020 to 2021 Model Y vehicles need it. the company is going to fix your bolts. So all that is a PSA. I don't have anything else to say about that. All right. Let's do this one. So, all right. Mo and I did extensive research last night until late. New Cardano price prediction. So, yeah, this is the new coin that Seth and I researched last night. This one, I actually have a crazy prediction with this one. I think that the government is going to buy a lot of this. And my price prediction for this is $30 trillion. And that coincides perfectly with the debt of the United States. So I think that they are going to get new Cardano coin, and it's going to become $30 trillion. We're going to pay off our debt, and a trillion of that we're going to give to China. And that's going to pay off the Chinese debt that we owe to them. And we Gucci. So coins are basically hedges against inflation, and we can pay off our debt to China, which is very little, relatively speaking. And we can also pay off all the debt in the United States. Now we don't have to use the Fed anymore. So, yeah, this Cardano, this is legit. That's all I know about that. So, yeah, those of you that don't know, I'm joking. That was sarcasm. But all right, so let's get over let's go over to this. So I did this a couple weeks ago, but I want to do it again because I think this is very important. And smash the like button for my $30 trillion prediction. I don't know how I do this with a straight face. That's all I know. All right. So this is XLK. This is the tech ETF sector. And what I did is I took this back to February 19th of 2020. That's kind of when we were at the peak of the market before we got this massive fall. And I took it to May 7th. And I'll show you guys where we're at with, where are we? June 2nd today? Yeah, June 2nd. But May 7th is where I stopped it because that's when the jobs numbers, the unemployment number came out, etc. So here we go. So I'm going to read off of this. And let's see. Okay, so February 19th. We had this high in the, you guys could see everything. Okay, so February 19th, you had this high in the market. You know what? Let me blow this up a little bit more just because I want you to see a little more. It might cut off these prices over here, but you really don't need to see the price. All you need to see is this. Okay. I think that's better for you guys. And can I move this up a little bit? Perfect. All right, perfect. So February 19th, 2020, the 10-year treasury rate was at 1.56%. The thing that led this up to this point was big tech, growth stocks, and then interest rates. This is relatively low, and we were starting to get that whisper of interest rates were starting to come down. Interest rates have been coming down for home mortgages and car loans and everything since 2018, call it. I think it was October of 2018 we started trimming those rates. It could have been sooner than that, but I might be off. But then, of course, we had the pandemic. Everything shut down, this and that. And we had interest rates that were dropped to zero. Also, your 10-year treasury rate was dropped incredibly low. So this was great for big tech stocks. I mean, not good. It wasn't good because of everything that was happening, but it was good for their environment. Low interest rates are great for big tech stocks because they borrow so much money. And growth stocks can do the same. They could borrow money a lot cheaper. So that was the situation that was happening. Then you had this incredible run that started to come up. Of course, we were staying at home, but the stocks that were benefiting most from this stay-at-home time were big tech because everybody was using iPads, computers, this, that, Zoom. All of these stay-at-home things just kept going higher and higher and higher. And we got to this point on September 3rd where the yields kept dropping and the price just kept going higher and higher and higher. So October, then at this point, let's see here. Rates began to go. Yeah. So then the rates began to creep up, slowly creep up. And you can see that they got to the 0.88. That was the 10-year treasury. But we had a little bit of a pullback. Okay. Now, the reason I'm doing this, guys, is you can go back and you can look at these going back to 2008. I can do one for you guys going back to 2008 and we can see what happened during that time. The point is that all of these things cycle and things can't go up forever. And there are it's not just talking point reasons from the media that are the reason that we get these pullbacks, this and that. There's actual numbers and things that do matter, as we saw yesterday when I was talking about inflation, etc., that really keep these things going. So October 30th. Oh, during all of this time, by the way, like I said, zero interest rates, $12 trillion plus in stimulus monies, and then of course we had the vaccine talks that were just driving this thing higher and higher and higher. So October 30th to February 16th, we started having the rates creeping. A little bit of inflation talks came in, and this was this was a good environment. This is where we had more stimulus talk coming in. Now February 16th came along, you had pretty high interest rates, and then boom, remember we got that 10% correction in the NASDAQ. That was all about big tech and inflation. That's just when the inflation whispers started happening. Now you draw a line across here. For those of you that don't believe in charting, I don't know what to tell you. There's a support line right here, and it kind of sat right on that support line. And it dipped, and March 5th was at low, and this is where the institutional buyers started coming in, and we also started getting these higher yields, and we got a stimulus bill. That kind of sent prices higher and higher. April 1st came around. If you remember, we had, this guy keeps saying wait for June 10th. I don't really understand. I would love, hey, Verzigi, are you a patron? If you are, send me a DM. I want to know what you're talking about with this. Anyways, April 1st came around. And you guys remember that we had every single week we had jobless claims were lower. Jobless claims were lower. Jobless claims were lower. And then everybody started whispering, guys, we're going to create 1 million jobs in the month of April. That is going to be that's what it's going to be. April, we are going to create 1 million jobs. And also, if there's any inflation that's going to happen, it's going to be temporary inflation. Temporary inflation. It's you guys know my thoughts on temporary inflation, but it is what it is. So April 5th, we started seeing that big creep in the market. We were making new all-time highs again because we were going to see 1 million jobs created. We were going to only have temporary inflation. And then on around May 7th is when you had that very disappointing jobs number come out. 266,000 jobs created. You actually had a real fear of true inflation that was going to start happening. The Fed was saying that now they're looking forward to this month, to the May jobs numbers. They're saying, okay, if there's good jobs numbers in May, we're going to stop our little bit of spending. We're going to stop doing our $120 billion a month in bonds, $120 billion total in bonds and mortgage-backed securities to prop this thing up. If we do get that, we're going to have to bring down a little bit of, we're going to increase our interest rates a little bit. So that's a situation that got us to this point. Now, let's see so XLK, and guys, as you can see, all of this is all tech. This is not the S&P. This is the tech sector. Now, why do I say the tech sector? Tech sector is what leads markets. If you look going back to 2014, I think 2012, what has led this entire market to this point? It's been 4 stocks. It's been Facebook, Apple, Amazon, I guess 5 stocks, Google, and Netflix. Netflix. This is terrible. Okay, Netflix. You get the point. That has accounted for 45% of the move to the upside on the stock market, taking it to these all-time highs. I don't know about you, but this goes back to the same thing as if you have 50% of your portfolio, 80% of your portfolio in one stock. That can make you can also break you. That's all you need to know about that. But that's a sequence of events that happened. I think it's incredibly interesting. I love looking at that stuff. I love drawing these things and just seeing and correlating exactly highs, lows, what happened here and there. And it kind of gives you a thing on history. Now, you can go back and look at Enron and what happened back in the early 2000s, et cetera. Now, even when you go look at what happened in 2008, 2009, 2010, you can draw the same kind of map and schematic and see what happened. But hey, on Amazon. But yeah, that's that. So guys, give me some stocks. I'll run through a couple stocks for you this morning. We have about 4 minutes left. Biogen is up right now. Let's see. And remember, I released the Employed Trader series yesterday. For those of you that are interested in trading but don't really have the time to do it, Employed Trader series is out. Guys, smash the like button. Let's see here. Support and resistance never lie. It's truly incredible, this support and resistance thing. Truly incredible. Let's see. WWE. Didn't we just do that one on a live stream or something? Let's see. API is looking like a 50-50 trade. I don't know what that means. WWE. Looks like a downtrend. My man, the fishing nomad. I'll do it. What does it say? BB? Blackberry. Oh, Blackberry. This is hype. Well, actually, BlackBerry's not hype. They're in the midst of being short squeezed, but your trend is fine. You're fine. You're over all these major moving averages. Just be careful with this one. Make sure you have stops in place. This thing can certainly come up here like this and then boom, come right back down because there's nothing behind it. They could say all they want about getting involved in 5G, getting involved in Amazon, etc. You guys got nothing. Here we go with Airbnb again. I love the Airbnb. It's so funny. DGX, Andre, I got you. Quest. Oh boy. So we certainly have a downtrend right now. A lot of selling volume coming in. You could see yesterday it just closed right at its 100-day moving average. Hey, if you want to short this, well, I mean, you're getting into this oversold area, but if you want to add to a short on this and get something like that, if it breaks this support level, you have quite a ways to move down here. But remember, this support level is very strong. It's the 100-day moving average. So, yeah. All right. Dun, 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 dun. I thought of a good short squeeze joke for Thursday. Do you think it's a good idea? Yeah, I think it's a great idea. Even when I say like, Susie, you're unbelievable. Your jokes are pretty good. I will say that. AMD. Ooh. Who said this? Who said AMD? Mike Jones. 281-330-8004. All right. Huh. Let me zoom out a little bit here. What am I seeing there? How did we not see this? All right. For those of you that are in the Bid and Ask Nation, somebody throw in their AMD. So I like this trend that's happening right now. I like the consistent volume that it's having. It just needs to get over its 100 and 200-day moving average. It's going to be a challenge. And you can see, guys, this is how powerful those moving averages are. You see, when you have this thing yesterday, it ran right, actually, what day is today? So Friday, it ran right into its 100-day moving average, and it pulled all the way back. That's where you got that really long, wait a second, this was yesterday. It got that really long wick on it. So it tried to get through, pulled all the way back. You can see how powerful these moving averages are. When they bounce up, when they get to something, they need incredible volume to push through. Yesterday was a pretty good volume day. Still couldn't push through. So how do you upgrade to the Bid and Ask Nation? Yep, email help@everythingmoney.com and they will assist you. Or you can just hop over to patreon.com/everythingmoney. Let's see here. And click join and you're Gucci. What's the market doing right now? Let's see here. All right. Let me see. One more. Okay, I'll do it. Do I want to do Apple? 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 All right, fine. I'll do Apple. All right, Apple, downtrend right now. Apple always has great volume, and you can see that it's stuck right here. It's just consolidating right here. Coincides perfectly with the 200-day moving average. So, yep, that's that. API. Let's see, API. Last one, then I'm going to get out of here. I have to go in 50 seconds. Sorry, I have to go in 10 seconds. Oh, API. What do we have here? Somebody throw this in the Bid and Ask Nation watch list. Who said this? Jonas. Let's see what we got. Okay, so I think, let's see, 1 year. What is this? So we do have a 50%-ish. We need, this is going to, actually, this thing has some room to run. Yeah, somebody put this in the, oh, now I see. So this stock is just, this is pretty new stock. So this just became 200 days. This is probably, when did they go public? Give me 1 second, guys. I want to just find out what day we went public here. They went public in June of 20. Oh, okay. So we're fine. Yeah, somebody put this in the Bidnest Nation watch list, and let's get on this one. So, do I do a video on Tim's portfolio? No, we're not doing Tim's portfolio. You get me, Seth, and Paul. That's enough. Unless Tim wants to put it out there, but I don't think Tim should put it out there. His is same old ETFs, etc. Seth's portfolio is a lot more fun than Tim's portfolio for the average guy. All right, guys, you guys have a wonderful day. Thanks for joining the Bidnest Nation. Follow me on Instagram at TraderMo_EM. Follow Paul on Instagram at Paul Gabriel, GRABRAIL. And I'll see you guys tomorrow. You guys are the bomb, and have a great day. Don't forget, Saturday, if you're in the Bidnest Nation, I'm doing a morning live stream, 10 a.m. for you guys only. I'll stay for as long as you want. I'll stay for 2 hours. It doesn't matter to me. You guys have a great day. Peace.